Okay. Alright. Today I will be covering on how to trade the uptrend. Today we'll be discussing about uptrend, and so after that we can be in a position to understand what an uptrend is, what an uptrend market is, and how you can be in a position to identify and also have some trades based on you on that. Okay, now as the topic, as you can see the topic here today, of course, there was a video I did whereby I was talking about the market structure, and in the market structure whereby I talked to the three types of market structure. I talked about that the market might be in an uptrend market whereby is making high and high lows, or the market can be in a consolidation state whereby the market is making high, like equal highs and equal lows, and also the market can be in a downtrend whereby the market is making low and low high. Now this video I will be talking about an uptrend market specifically, so that whoever is trying to come up into this market can't be get confused. Now let's jump like deep into it. Now, what is an uptrend market? When I talk about an uptrend market is when the market is making high and high lows. If a market happens to make a high, then makes a high low, makes another high, makes a high low, makes a high, and makes a high low, and makes also a high. Let's say, for example, you happen to, this is how you, this is the definition of an uptrend, whereby the market started from here, as you can see. Let's say this is whereby when the market is making an uptrend move, it makes a high, makes a high, high low, high low, and high. Now, this is the definition of an uptrend market. An uptrend market is whereby the market is making high and high lows. Meaning what? That generally that the price is going up, and in this case you will be looking for buys. Now, then from this type of structure here, you can be in a position, if you have been into the market, you can be in a position to see few things. One thing, you can be in a position to see what we call break of structure. There is what we call break of structure. I have a break of structure there. I got another break of structure here. Then I have another break of structure here. This way. Here I got another break of structure. So in this case, this is a break of structure, which is a BOS. Here we have break of structure here, and all the rest you can see break of structure, break of structure, break of structure. Now, for you to be in a position to trade these markets, first of all, I am done with the definition. Now, for you in a position to trade these markets, you must be in a position, first of all, to know how to trade uptrend market structure. Now, this is whereby I'm talking about how to trade uptrend market structure. The first thing you have to know is how to spot an uptrend market. How to spot. And for this case, you have first of all to spot an uptrend market. How do you spot it? Then you have to know what you call demand zones. I will explain later. and you have to know what are entries and your exits. Now, for this case, let's go back to the first thing. You have to identify, you have to know how to spot an uptrend market. And how do you spot an uptrend market? It is very easy. For you to be in a position to spot the uptrend market, you have to know what you call this way. This is how to spot an uptrend market. This one. So if you need to spot this an uptrend market, you to know uh, you have to know how to look for this is a look for look for high high and high lows. You must be in a position to master those. Look for high and high lows. Then that is now how to identify those an uptrend market. All right, that is now how to spot an uptrend market. For you to spot an uptrend market, you have to identify, like, look for high and high lows. That's the only way you can be in a position to identify an uptrend market. Now, you have to know another thing. When the market is in an uptrend market, the market reacts, or the market start moving to the uptrend move to the uptrend direction in specific zones, right? Therefore, you will have to understand that uptrend market starts to move to move start to move from a specific zone. You have to understand that the market starts to move to the price now starts moving towards an uptrend direction in from a specific, from specific zones. And these specific zones are the ones which we are referring to demand zones. Demand zones. Yeah, like the market now starts moving towards its direction from a specific zone. Most of the guys make a mistake whereby they think that it's a specific line, whereby you will find most of the people who are like the most beginners, instead of drawing supports and resistances zones, they draw what you call lines, a single line, which is like totally different from that. Supply or demand zone is a specific zone. So the market now starts moving towards its direction from specific zones. And for the uptrend market, the price or those zones are called demand zone. So for demand zone, we shall be looking for buys opportunities. Now, that is now spot how to spot an uptrend move. You have to look for high and high lows. And I have explained, like I have drawn a very good structure here, illustrating how high highs and high lows looks like. And within those high highs, for you to identify that it is a high, you have to identify a break of structure. Now, another thing you have to understand is that the market starts now moving towards its direction from a specific zone. It's not a single line, it's a zone. Therefore, it's very good for you to draw a certain zone like this. Use this like a rectangle here, right? Now I'll be I will be showing you for example of a trade. Now let's go back into what you call demand zone. Of course, for you, you have to know what is a demand zone. And I have explained to you that a demand zone is, I have explained to you that a demand zone is a specific zone whereby the market, an uptrend market, now starts moving towards its direction. That is now the demand zone. Now, this is how you trade. I am done. This is how you are supposed to trade on an uptrend market. First of all, know how to identify or how to spot an uptrend move. Now, once you spot it, you must know a specific zone whereby the price will come back and start going towards its direction. How do you spot that? Now, this is how the market moves. The market at first place will move from this zone to make a high like this. Now, you will not come immediately and enter a buy from this position, since the market first of all will have to make a pullback to a certain level, and from that zone the market now goes up, breaking the previous high and creating another swing high like this. Now, for you to identify, you don't enter from this position. What do you do? Wait for the market to pull back to a certain level, right? Now, in that specific, now you have to identify within this zone, within this area, where is the demand zone, and how you identify a demand zone is very simple. I will show you on how you are supposed to identify a zone, like demand zone. A demand zone is identified whereby there is, when the market is moving upward, in this case, when the market is moving upward, it's making a green candle for this chart. Master the color of the candle being formed when there is an uptrend. Now, for it to have to break a certain structure, for this case, I'm talking in this area, for it, because this is what I will be using as an example, how to identify an entry point here. Now, it's making a green candle. Now, you have to look a different color. If it is a bull candle, you have to identify the last bear candle in that time frame, which is now your demand zone. Like for example, in this chart, I can identify from high time frame, I can identify that in high time frame, the market is in a consolidation. It's making a equal highs, high lows. High, like equal high, equal lows in this zone. Can you see? It's in a consolidation, and the market being in a consolidation state, I want, because it will come back into this zone. Therefore, I have to look for entries within this trend, right? And in lower time frame, you will find that this one is a very good uptrend move. Therefore, I will show you on how to identify those demand zones in a while. Now, for that, there is another thing you have to master. Once you have identified that a certain zone, that demand zone, which I will show you, you have go and watch other videos illustrating demand zones and supply zones. You will understand better. But I will still do a video illustrating demand zone. Now, you have to master one thing. What are your entries confluences? What helps you, like bonyeza, or what helps you, or what guides you, or what tells you that it is now time to press that buying bottom, you have to have what you call entries confluences. You can be using either candlestick patterns, whereby you can have a bull and Galvin candlestick, or you can use what I use personally. I use what we call change of character, and I will show you. Then, or now, after knowing your entries, before even you know your entries, you must know. You can't just start a journey going nowhere. Like you start a journey aiming, like you are aiming to go nowhere, right? So you have, first of all, even before you master your entries, know your exits. And when you are back testing your strategy, ask, like, go do some trading journal, have some trading journal, whereby you will be in a position to identify how many trades were you able to identify an exit and was hit. That is now your TP. So the first of all thing you have to do is know your exits. Once you have known your exits, you have to know what your entries are and back test it. Like for example, if it is making a high and it makes a pullback here, my target will be in this position. Let me show you. Let me just do this. So if the market is making high, let's say for example, a market makes a high, right? And makes a high low, then makes another high for me, and then I'm waiting for a pullback. So I have already identified a certain zone here. So I'll let's say for example the market is here, and I have already identified a certain zone, maybe a demand zone here. That is now my demand zone. So what I will be waiting for is, I'm waiting for this market to make a pullback here. Then where is my exit? Therefore, my exit, I have to mark it, or my exit, I have to have it the previous high, and that becomes my exit. Therefore, I will be having a good trade, whereby I will be having a very good long trade like this. I will have to come and position my trade there, and I will have now to what? To master that the entry point and the exit point. Let me show you this way. It is very simple for this. How you wanna do it? It depends. So my entry point will be there. So my entry point will be there. Like my exit will be there. And for my stop loss will be below this. Now let's go back to an example I got here. So let me just do this. Let me just do an example here. For example, I have like this GBP USD. Let's just do a quick analysis, which is very simple, and you can be in a position to identify entry and exit points. Now, one mistake that guys make, especially the beginners who are coming to the industry, is that once you are doing an analysis, you only rely on one time frame chart, which is very wrong. It's very, like, it's, for me it's very advisable, if you're gonna do some analysis, just use at least 4 time frame, at least 4 different time frame, from high to low time frame. For this I will be doing I got a strategy whereby you can swing, and I got a strategy where you can day trade. These are day trading strategy, whereby I will start from daily. From daily, I can see that the market is making high, like equal high and high, equal high and equal lows this way. So in this type of account, like this type of market structure, is that the market is in a consolidation state, whereby the market is making equal highs, equal lows. You see, from this type of a market structure, this way. This is the type of market structure whereby I have right now. So Let's say, for example, you have not catch, like you were not in a position to capture this type, like you were not in a position to capture this type of a trade. Like you want to trade now going upwards. How do you approach this type of a trend here, over here? This is very simple. So from the high time frame, you will be in a position to identify that the market is in a highly, like in a weekly support, right? From a weekly support, which is now the demand zone in this time frame, right? So you'll have to identify this one and go to lower time frame. In daily, you have just to look at the chart, knowing that you are looking for buys. Nothing else. Don't look at more thing. Just look at it. It's in a consolidation. The market is in weekly support, whereby I will be looking for buys. Now, you go from daily and then you go into 4 hour time frame, which is now you like it will give you fine details based on this pair. Remember, this is the move. Let me have this. Let me go to daily time frame and I show you. Like from, I want you to walk with me slowly by slowly, step by step, no rush, right? So let's say, for example, this is whereby I will have to draw this. Let me just delete this one. I want to have a good word. Yeah, I use this one. Let's say, for example, it's there. So from the horizontal, don't I have a horizontal line? See here, sorry. See here, sorry. Let me see. I got a horizontal line somewhere. Where is it? Text, these ones. Parents. Yes, I got a horizontal line here. Horizontal. No, vertical. Yeah, exactly. Let's say, for example, this is now my vertical line. I'm looking for buys in this position. Or I'm looking for an uptrend market whereby I can have buys. So what do? From the daily, I have already identified that I'm looking for buys, nothing else. Now, let me go to lower time frame, which is now the 4 time frame. In this 4 hour time frame, I will be looking specific zones where I will be looking for entries. Now, you can be in a position to see, for those who use trend lines, you can be in a position to use your trend lines, although me, I don't use trend lines. You can use as a trend line like that. But for me, I just use naked eyes. Now, for this, for you to get entry point, you will not, remember this is the first move. This is the first high which is made. You don't have to look anything, like you don't have to buy something else, like to look for buys here. After making this high from this area, now the next thing you have to do is look for buys. How can you identify these zones as you are buying or your entries? It is very simple. Identify a demand zone created in this move. In this move, can you see this high? Identify a certain but like demand zone created. How do you identify a demand zone? Demand zone is identified whenever there is a break of structure and the different color candle made to the uptrend. This is now, for this case, is the bear candle made and there is a huge imbalance. That qualifies a what? A demand zone. How do you do that? You just come. Now turn your graph from candlestick to line graph this way. Now, after turning into the line graph, identify a certain break of structure. Now, I can see a good break of structure here. I can see a good break of structure here. Of course. Now, once I have identified a break of structure here, and I'm gonna mark it as a break of structure, BOS, of course. Now, once you have identified into that, you will have to change the line graph into a candlestick graph so that you can include the wicks. Don't fail that. Go back to candlestick and then come and identify that break of structure using weak spear, wicks. So I got wicks there. The last wick, can you see this wick here? Let me just make it a bit larger. All right. I got what you call included that. So for this uptrend here, I can identify a good huge imbalance here which didn't lead to any break of structure. And I can identify a huge imbalance here, which led into this break of structure. And within these zones, within that move, I can identify my zones as these ones. So I got a one demand zone here. This is one demand zone which I have. How have I identified that? Let me show you guys. In this move, the last beer candlestick was this, which was a doji candle, right? This one. So for this one, I will have to identify this zone as one of my demand zone, and of course, I'm gonna highlight it in this higher time frame. That is now the 4 time frame. This one, that is now my one demand zone. Within this break of structure, below it, there was another candle which was made bigger candle. This is the last candle here in 4-hour time frame. This is a very key candlestick here, and I will have to mark it. And I will have to mark that zone. This was the last candlestick made, including the body of the candle and the wick of the candle. So I have identified. So I got two zones, this one and this one. Something here can tell you where to buy. Can you see the trend line? This demand zone here is in line with the line, like with the trend line stuff. But for me, I don't use the trend line. So how would I have entered here, or how did I have to enter here and not here? Very simple. You have the first step is you have spotted the trend by identifying high highs and high lows. The next thing is you have identified break of structure. The third thing, you have to spot the demand zone below the break of structure, which I have done. Now, I have to mark my exits. I have to mark my exits, not entries. I have already identified the demand zone, but I have to identify exits because I want to trade knowing where the market specific I want to get into a trade, like to get out of the trade. How do I identify that? Zoom in, or it is out, I don't know. Zoom and then mark the high points above the demand zone, whereby the market has created this high here. So my first TP or my first exit can be this high. I can mark that high like that, right? Based on this. And previously, the market had made this high, including the wick. And I want you to just look at those charts and look at the at the reaction based on that. Then you have to make another one here. Now these are my exits. Those will be my exit in this trade. Therefore, I have identified all the things. Now it is my turn to look for entries. The entries, this is whereby most of the people fail because you don't have what you call entry confluences. What are your entry confluences? What makes you react to a certain? Don't come with the market hoping that you'll be now that guy like that. You'll be that genius whereby like you'll be good at good at predicting where the market is going. No, we don't predict, but we react. Therefore, you have to have entry confluences, and these entry confluences you can either have a bull candle, like you either use candlestick pattern, or you use what we call change of character, as I use. For me, I use change of character. Now, I will have to come into this zone, into this market, into this part, and I will have to wait for the market to give me entry confluences. If I don't get those entry confluences, I'm not gonna enter into this trade. How do I get? I use change of character. Go and watch other videos related to change of character. So I'm gonna change my time frame. And what I will do is, in this demand zone, first of all, I will mark the body, where the body of the candle is. So where are the, it is a body, it's a bear candle. So I will have to mark the opening of the bear candle, which is making up my demand zone. Therefore, I have marked that with that line. Then I will have to move to shift into a lower time frame, which is now 1 hour. Remember, we are from daily, and now we have to 1 hour. Therefore, in 1 hour, I will have to mark, I will have to to refine my demand zone using the lower time frame. You can see that in 4 hour time frame, this candle was filling the demand zone. But once it comes to 1 hour, this demand zone is now narrowed down. It is now narrowed down into this point. Where is it? Where is it? Yeah, exactly. Now my demand zone is narrowed into this candle. My demand zone is narrowed into this candlestick. This one. So you can be in a position to see that demand is a zone, not a line. Therefore, I will have again to mark that demand zone based on 1 hour time frame, and I will have to mark it. And then I mark it like that. Once I have marked that demand zone, I will have to go back, narrow down it to refine it up to 30-minute time frame. This is now the final part of it, the final of marking the demand zone. Are you getting it? This is the final part, or the final time frame for me to mark for that demand zone once it comes to the entry. Now, once I have marked all those demand zone, you can see that the demand zone, once it comes to that time frame, 30-minute time frame, is still narrowed down to where? To up to that zone, right? And you have to mark the opening of that candlestick so that you can be in a position like these lines helps me to identify if the price is still in that demand zone. Of course, I'm gonna be right? Then I have marked it. That's why you will see most of my entry points have these lines. This is how I mark the 4 hour time frame order block. Have introduced another word. Demand zone, of course, they are created, and things like those zones are created by order blocks. I have this one and I have this one. So what I will be looking for this for me to enter this trade is, I don't just come and place another just a buy limit, because most of the time I use more like my trades are based on buy limits. I will not just come and place a buy limit here. No, I will have to wait for this price to make a pullback to this zone as it did here. Once it has come back into this zone, I will have to go to the last time frame for me so that I can be like, let me like, there are type of trades I take, and I see people commenting on my Instagram point, like in my Instagram, and I don't know, I don't get like I don't give a shit, bro. Like, how can you take a trade less than like about 17 pips, risking 17 pips, 10 pips, like that, and you swing, man? This is how I do it. So I will have to wait for this trade to come back into this, into lower 15 minutes. I will be looking now for my entry confluences when it comes to this, and this is the final. I will have to wait for change of character in 15 time frame. Final. This is the final part of it. This is the final. I just look for entry or change of character, that is entry confluences in 15 lower time frame. Why do I go to 15 lower time frame? So that my risk can be narrowed down to a certain. There are pips I do risk based on a pair, based on the value of one pip, so that I can be in a position to understand how much I'm gonna lose for this trade if I'm gonna take it. Now, in 15 minutes time frame, what do I look for? I'm looking for entry confluences. What is your entry confluences? Change of character. Simple. I don't complicate it. I don't complicate it. It's very simple. This is based on me. So I'm looking this zone. Can you see I have circled it? So this is my demand zone, as you can be in a position to see. So I'm looking for any chance to get in that the market shows me that it's ready to go up. What am I waiting for? Change of character. How do I identify change of character? Of course, I will have to turn into it's a kind of a break of structure. It's kind of a break of structure with another demand zone. How do I look for it? I just go as I have identified change of character in high time frame, and I will go for line. So the market has broken, like has made this high. I can see there is a high here and there is another high here. How is it that in like when it comes to the candlestick, it has created what we call like an order block here, a certain kind of order block and a fair value gap breaking this structure here, right? Can you see that the market has created this kind of order block here, another favor like favorite gap here, and breaking this type of account like structure here, right? So there is a high chances that the market will come to react here. So the market, once it is in my demand zone, comes back into this position, right? Then it violated the order block. It went above it, meaning what? The price is about to go up to run. So what do I have to do? I must look if it has violated this one. I have to look for other demand zone based on these moves. I can see there is a demand zone here and there is another one here. So how do I do it? For my entries, now this is whereby you take guts and be in a position willing to take risk. How? I will come and say my entries will be in these positions. So I will have to come and mark my entries market, like I will have to come and mark my entry area like that. I will have to mark my areas of entries there. Of course, let me just make it cover so that you can be in a position to see. I'm gonna make it pink. No, fuck this shit. I'm gonna make it green. Of course, something like that. Can you be in a position to see, guys? I don't know. 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 Let me just make it orange. Exactly. So I'm gonna make my entries in this zone. I'm ready to take the trade. Now the last part of it where you fail is, does this trade really or this opportunity give me or allows me to risk the amount of money I always risk on this pair? How much do you risk for this pair? Of course, for GBP USD based on the price of each pip, the price of each pip. How much pips or how many pips am I supposed to risk this one? I'm supposed to risk 50 pips. So are these the difference between where are you supposed to set the stop loss? The stop loss, I'm supposed to set it below the demand zone, the final touch of the demand zone, right? How much am I going to risk? 50. Let's see. How many pips are these? Someone to calculate. This one is even less than 30 pips. So how do you do it? I just come and I do place two trades. The first trade, of course, it's long. I will have to the first demand zone here. I will have my entry there. my entry there. Then my second entry should be in the demand zone, and my stop loss should be around there, just below the demand zone there. And I will have, where are they my take profits? Of course, go back to 4 time frame so that you can be in a position to see your take profits clearly. And that's how you trade. And that's how you trade, right? Yeah. So my take profits are supposed to be, my first take profit supposed to be there, and or you can take it into the third time frame this way, into the last take profits. Just look at that. Just look at that trade. Just look at that trade. Simple. In my other charts, you'll be in a position to see always post saying that I'm looking to add more trades, more positions. And that's how you trade. Simple. Yeah. So let's do a very quick recap on how you're supposed to do it. First of all, you have to identify, or you have to spot the trend. The nicest thing is you have to spot a demand zone. The third thing you have to understand is how to spot entry points and exit points. Final. Let's meet in the next video, guys, so that hope you enjoyed and hope you're learning something. Trading is risky, and as I always say, trading is reactive, not predicting. Don't come predicting to them like what you know. React to what the market tells you. I wish you the best, guys, and let's meet in the next videos. Bye bye.